Okay, thank you, and welcome everybody to this AGM of the Ecology Building Society. Welcome to the members who are present and the members online. What we're going to do is we're going to have the usual sort of AGM type running order. We'll get a review of the year, both sort of general and financial. We'll do all the resolutions that we have for the AGM, and then at the end we'll talk briefly about our purpose. We've done an exercise with members, colleagues and the board to think about what the purpose of the ecology is, and we'll have a brief catch up on that. Meanwhile, housekeeping, we're not expecting, for those of us in person, we're not expecting any fire drills or anything, so if the fire alarm sounds, we need to get out, follow the signs in the usual way. Toilets are out that way if you need them. We are quorate, I believe, just confirming with the company secretary. Yes, thank you. And I would just like to introduce your board. Whoops, that's me. That's the board. So the current members of the board are Jaden Green, Vince Smith, Jed D'Alessio, Andrew Gold, Gareth Griffiths and Kerry Mashford. We are obviously doing the elections to the board later on. So what I'm going to do now is to invite... I've done this. I've told you what we're going to be doing. Sorry, I hadn't done my homework. I hadn't checked all the slides first. But now we get to the review of the year with our CEO, Gareth Griffiths.
Put on a bit of weight since then, so there we go. I'll mark my milestones with that, I think. So I think I'm not going to try and take too long to run through last year. I think Chris is going to talk to us in depth about our financial performance. I really want to just give some high-level messages. But first and foremost, I think I do just want to say it's lovely to see people here in Leeds. And I'm really hopeful that we're talking to a packed crowd online as well. So it is, I think, worth saying, our first year of trying this in-person and online event. And I think context for everybody, we made the very deliberate decision that we were also going to complement our AGM with a series of member meetups. And I'll be looking forward to telling you a little bit more about member meetups as we kind of roll through today. But I believe that with the people in the room here and the confirmed attendees online, we've actually got more people in total attending our AGM than we did this time last year. So I think that's a very positive sign, and I welcome that from a member engagement perspective. So your society last year delivered a good performance. It was a healthy year of profitability, and that is against the backdrop of what I think was a relatively challenging market. And I'll come on to talk about one of the things that as chief executive I feel really proud about from how the team handled that situation and circumstance. But also, and it will be a kind of recurrent theme throughout the AGM, a year of investment as well. And I've had the pleasure and the privilege of seeing some of the questions that our members that can't join us today have asked. And some of them are saying, Gareth, throughout your chief executive statement and throughout the annual report and accounts, you talk about investment, you talk about transformation, you talk about IT. What does all of this mean? And actually, what does it mean for us as members? So I do just want to touch on that. But last year, we grew our total mortgage assets. We helped 310 people in total last year, 310 community projects or ecological homes. I certainly had the privilege of visiting some of those homes last year. from my perspective, it's always really humbling, one, to meet members in the flesh, spend a lot of time in Silsden, and it's actually really nice to get out and about and meet members, but see the end product of what it is, the transformation that Ecology can help finance. Last year, as no doubt members will be aware, and the year before, we've seen 14 incremental Bank of England base rate rises. And I think the thing that I am most pleased about, and that I touched on earlier, is that we passed on more rate rises to our savings members than we did our mortgage and borrowing members. And I do think that's really important, because for me, that touches on the essence of mutuality and what it means to be an ethical, values-driven organisation that looks after and values its members. So let's just talk then momentarily about the transformation programme. And I referenced a year of investment, and that is both investment in terms of technology, but also in people and in skill and capability. It will not surprise many of our members that at the moment our technological reach is relatively limited, and to attract and also be attractive to existing members, we know that we need to move with modernity, and we need to make sure that we update our technology to be able to service a new generation of members. There's something I want to reassure everybody about, and I said this at last year's annual general meeting, and I say it again today. One of our unique points as an organisation is that we are a people-powered business based in West Yorkshire, and that will not change. We will use technology to augment the offering, but I absolutely stand in front of you today and promise you we will not be changing our unique selling point of being a people-powered business in Yorkshire. But we hear on a relatively consistent basis from our members that actually they want to be able to do the ordinary in a relatively seamless way. And indeed, there are a number of questions pre-submitted around things like, when are we going to get an app? When are you upgrading your internet banking technology? And so these are clearly key things that we need to make sure that we balance up and that we offer to both existing and also to new members. I talked about the investment in people and skills. It will be no surprise to anybody that as an organisation we take things like our regulatory responsibilities very seriously, and indeed our kind of systemic financial services responsibilities, and to ensure that we can continue to make a difference for both our members but also satisfy the regulatory requirements that are incumbent upon us. It's really important that we continue to both invest in upskilling existing colleagues, but also where we have specific needs, recruiting additional colleagues. I was really pleased to be able to welcome Chris, our new Chief Financial Officer, to the board last year, and Chris will be talking to you more about his entry into the society and indeed our financial performance as well. I want to say thank you, and I mean that as a very heartfelt thank you. I want to say thank you to our members. I want to say thank you to our members for being loyal, remaining with Ecology, because fundamentally it is your savings, your funds that allow us to do all the great things and finance all of the great buildings that we see around us. I know that reference doesn't work for online, so I'll have to work on that one for next year. However, in 2023, listening to member feedback, we have started to do a very comprehensive review of our product range. And in fact, this year, I'm ruining next year's AGM already, we've launched a number of new products which were in direct and from direct feedback from our members. So we've added new savings products to our range, and we've started to make improvements. And later on this year, we're going to be launching further impact-based mortgages to help even more customers and try and help their stories to thrive. What else have we been doing? What else have we been really trying to focus in on? Well, we ran some independent research. It was actually this time last year to really find out what savers in the market wanted. 74% of savers told us that they wanted their savings to have a positive impact on the environment and society. And so I'm really proud at some of the work that the team did last year. And if you go onto our website, plug coming up, ecology.co.uk, you will see on there a section that talks about know where your money goes. I'd encourage everybody to have a look, because it gives in-depth analysis as to all of the different projects that we have funded across the country. Members can see in their own local geography where we have funded projects. We have just launched the Ecology Hub, which is a very in-depth, very useful information site for people looking at home renovating, for people looking at self-build. Significant information on there, and that has only happened excuse me, through the hard work and dedication of our colleagues in the marketing and the digital marketing team. So big thank you to them. So, couple of other bits. I talked about member meetups at the start when I was introducing things. We will be going out on the road over the course of the next couple of months to talk to our members in hopefully their sort of home locations. And I'm really excited about that, because I think it's going to give us an opportunity. We're working at the moment to try and showcase some of our member projects, have some experts come to talk, but we are also going to be unveiling our journey to net zero and how we are going to be achieving net zero carbon in both our business operations by 2030, and that is our commitment that we launched back in 2021, but how we'll be reducing our carbon across our financed emissions, which is what you would see from our mortgage portfolio, and indeed what we report on in our annual report and accounts. So, two more things for me to just cover off. One is that we are making good progress with our 2030 strategy implementation, and I've got a slide that I'll cover off just in a moment. But and I'll lay this sort of breadcrumb trail for excitement to get everybody excited. We have also been working on renewing and refreshing our purpose, and I will talk to you more about that as we get towards the end of the annual general meeting. So in terms of our strategy, we launched our 2030 strategy, and I talked about this at last year's AGM, to coincide with UN Sustainable Development Goals and ensure that our trajectory on carbon reduction was rooted in science-based targets. And therefore, when I joined in 2022, the board asked me to ensure that there was a coherent strategy, business strategy, for making sure that we did that. I'm happy to say that in most instances, we are on track. Chris joining actually has allowed us to fast track a number of initiatives, and in terms of having the right balance between pricing on our mortgage and our savings books, that is something that is a key consideration for Chris and the team, and he is fast tracking at the moment. And we are looking this year to create some more facilitative terms and conditions for our membership and the product set that we currently have. So it's been a pleasure to work with the team at Ecology, and none of this happens without the dedicated people back in Silsden. So I would encourage any of our members who interact with us now or who wish to interact with us in the future, please take the time, if you do get it, to thank any of our colleagues that you might come into contact with. Lots of hard work goes on behind the scenes. And that hard work all leads us to our financial performance and to Chris. So I'd like to welcome Chris.
Thank you very much, Gareth. So it's an absolute pleasure to be speaking to you all today. not actually my first AGM at Ecology. I came to last year's AGM, albeit I sat on your side of the table as a prospective employee, and took great interest in obviously the proceedings of last year, knowing that I was likely to be stood on this side of the table this year. So today we'll be just taking you through some of the financial performance highlights from 2023, I guess giving a little bit of context to kind of how we got there, and answering obviously any questions the members have as well. So the first thing I think is kind of worth saying is the fact that we've continued a kind of long-term trajectory in the society of continuing to build our mortgage asset portfolio, and saw really good growth in our mortgage book in 2023. I think that's a really clear indication to the business that the product and the offering that we have is something that is valued by our existing customers and prospective customers. And this level of growth that we've been able to achieve, particularly over that longer term period, is something that I think a lot of our peers would be envious of, and is a really fantastic story for the society. The other thing that is kind of worth mentioning, and Gareth has touched upon this, is the fact that our profitability was healthy in 2023. We note here that the profit was not as high as it had been in the prior year, 2022, but was comparable to some of the years that we saw prior to that, as it were, and was a good, healthy profitability for the year, and we'll come on to later in my slides as to kind of the impact that had on capital. We've outlined here some of the reasons that we saw profitability reduce a little bit from 2022 into 2023, and Gareth touched on some of these. We've invested heavily in the year in the costs to develop and create the kind of opportunities for the future of the society, in investing in key areas like technology and IT systems, and some of our colleagues as well, to be able to support some of the positive steps that the society's taking. I think the other thing that's notable is the fact that, you know, it's an impact that has affected us all personally, that inflation was high as we went through 2023. The cost of things that both people and businesses were consuming increased, and that affected the society as well, with our cost base increasing. It's worth noting that, you know, inflation has not kind of reduced and retracted from where it was, and that we continue to invest heavily in the business, in the transformation and IT steps that we're taking, and therefore we do expect our cost base to remain high in 2024. So Gareth mentioned that one of the things I think he was very proud of, and certainly I'm very proud of as I look at the year of 2023, is that the society was able to kind of demonstrate very strong mutual values in the year, and it was able to return more value to its savers than obviously the increases that it passed on from bank base rate increases to its mortgage customers. The graph that you see on the slides here shows a yellow line that shows an increasing trajectory of bank base rate, whilst you can see that the society's margin, shown in green, was actually stable through the year. And I think that's a really important point, that through a difficult macroeconomic environment, a cost of living crisis, the society was able to protect its mortgage customers as much as it could by not increasing the costs of their mortgages through that period, as much as clearly the Bank of England's base rate increases could have suggested would have happened, and that a lot of peers and other financial institutions did pass that through to their mortgage customers. The next slide just expands on that and breaks it down a little bit further. You can see again on this graph just the margin for the society remaining relatively stable through the year, and we'll just kind of break that down a little bit into kind of how that affected the different members within the society. This line, you can see the amount that the society was returning to its saving members increased in the year from around 2.6 up to 3.5, and that meant that we were able to return more value to our savings customers than we were at the beginning of the year. Again, I think demonstrating our mutual values really strongly. And again, as we come into 2024, Gareth mentioned the fact that we have launched new products to support our members, but another thing we've actually done is put through further increases into some of our key products, such as our ISA, easy access and regular saving products, to provide more value back to our savings members. The next line shows and demonstrates the fact that we didn't pass through bank base rate increases into the mortgage cost for our customers as much as I say, that Bank of England increase would have suggested may have happened, and therefore we were able to, in that cost of living crisis, protect those mortgage members. And the last line just shows that as bank base rate increased, the society was able to increase the return it had on its liquidity balances, the balances it effectively holds in cash and cash reserves. And effectively the increase in the return from those liquidity assets was how we were able to afford as a building society to pass more return back onto our savings members whilst not increasing the cost for our mortgage customers. There were two more areas I was just going to quickly touch on in this slide, which is the trajectory of our liquidity and our capital. So our liquidity through the year, we did see kind of outflows from some of our products. I think a lot of the impact of that was we've touched upon the fact that there was a cost of living crisis in the year, and a lot of our members needed to access their savings as you know, expenses and things were were difficult for people in the year, and therefore people had to access their savings. It was also a very competitive, a very kind of volatile and competitive market for retail savings in the year, and therefore we saw the activity of people moving funds around increase quite significantly in the year. And I guess one of the points that I think is really important at the graph at the bottom there is the fact that whilst the society did see its profits reduce from 2022 to 2023, we were able to increase the capital base of the society in 2023, and even more importantly, we were able to increase our capital ratio, so the relationship between the capital that we hold and the capital that our regulator insists that we do hold, which shows that the strength and security of the society improved through the year. The last thing I was just going to touch on is kind of expectations for the year ahead. So the first thing I think that we can say is that from a business perspective, touched upon the fact that we do expect our cost base to remain high in 2024. We are continuing to invest in our IT infrastructure and technology and people capabilities. From an asset base, we do expect to continue to grow in 2024, albeit as we concentrate on transformation and some of the activities associated with that, our growth may be lower than it was in the year that we're reporting here, 2023. We've touched upon the fact that we do expect our profitability to be lower in 2024 than it has been in the year we're reporting here of 2023. And again, that comes back to the fact that we continue to invest in the business and technology. It is worth saying that obviously as part of my role within the society, what we do is long-term financial planning for the society. And whilst we do expect costs to be high in 2024 and our profitability to be lower, we have kind of demonstrated quite strongly that the benefits of that in the medium and long term for the society are significant, as the cost investments that we have in technology efficiency and the ability to invest in our society's future means that in the medium term we should see our society continue to grow and grow profitably. The last couple of points then. So margin, I think that those of you that keep abreast of economics and the expectations of UK bank base rate will be expecting that we see reductions in bank base rate through the second half of 2024. I think we've hopefully been able to very clearly demonstrate that the society looked after its members as bank base rates went up, and we will continue to balance that important mutual responsibility as an organisation with the financial performance of the society as we see bank base rate change in the second half of this year. And then importantly, that kind of capital trajectory for the society and the investment of the society's funds is balanced with our growth and our capital and capital ratios to make sure that we have a secure society in the medium and longer term. Quite happy to take any questions.
So does anyone have any questions on the accounts? We'll be taking general questions later on. No?
Thank you.
So thank you, Chris and Gareth. So we now start going through the formal resolutions, but before we do that, because a number of the things we have to vote on are the elections or re-elections of the directors, we have this year, for the first time, we're moving to re-electing every director every year. We used to elect directors for 3 years at a time, but we've changed to doing it every year because we think that is better in terms of the member involvement and making sure that members have a say on what's going on. So I'm going to go round all the directors who are standing for election or re-election. And what we have is, just to set this up, Gio D'Alessio, Andrew Gold, Jaden Green, Gareth Griffiths and myself are up for re-election. And then Chris White, who has been co-opted to the board during the year, but obviously needs to be confirmed by election this year. And then Kelly Hargraves, Samira Khalik and Andy Mulligan, who we would like to propose are elected to the board. So I'm going to ask each of those people, maximum 60 seconds, please, just to introduce yourselves. I will start. I'm Louise Pryor. I'm the chair of the board. I have a background as an actuary, working mainly in insurance, but I've also spent quite a lot of my career working in artificial intelligence and software development. For the last 15 years or so, I've focused mostly on environmental issues and climate risk. Jaden, I'm just going to go along the
Yeah, Jaden Green, my background's in financial services and housing. Perhaps unsurprisingly, an interest and a real passion for retrofitting of social housing, given the challenges we face.
Kelly.
Hi, I'm Kelly Hargraves. I've been in financial services for 23 years. My expertise is in risk, compliance and sustainability. I actually consult to many financial firms in the city around getting their net zero plans in place.
Thank you. Gio.
I'm Gio D'Alessio. This is the second AGM that I participate. It's a pleasure to be here. My background is in information systems, cybersecurity, and digital transformation. I joined Ecology with the idea of bringing ethical technology to an ethical financing company. Is a very important time right now for the society because of the transformation that has been mentioned. And I look forward to to work with you guys and hear your feedback and making sure that we implement it within our transformation program. Thank you.
Chris.
So Christopher White, I am a chartered accountant. I've worked in different building societies across the north and east of England. I've acted as the CFO for 2 other societies before joining Ecology last year. So I guess a lot of experience in financial control of building societies and financial risk management in that setting. As I say, joined Ecology Building Society last year as the opportunity arose for me to, leverage some of my experience within building societies and, an advocacy of mutuality with personal interests around sustainability, and obviously the Ecology was a brilliant place for me to be able to achieve both of those things.
Andrew.
Good evening, everyone. I'm Andrew Gold. I'm the Deputy Chair and Senior Independent Director at Ecology. My executive career was in financial services, in mutual building societies. I'm a qualified accountant with a background in risk. I first became aware of and involved with Ecology in 1996 as a member, so I was a pleasure to join the board as a non-exec director in 2015, and it's really the values of the organisation and what it's striving to achieve that continue to motivate me to give my all to be a non-executive director for the society.
Gareth.
So I'm Gareth, and for me, I'm here to try and make the transition just. I have a passion for social justice, and I fundamentally believe that Ecology can be absolutely at the heart of delivering that.
Samira.
Good evening, I'm Samira Khalik. I'm a finance professional with over 15 years experience in financial services, in particular the mutual sector. I've worked extensively for large building societies, and I also serve as a non-exec director for the Leeds Credit Union. My background spans across multiple disciplines across finance, so senior roles including technical and commercial finance, financial strategy, risk and business strategy. And similar to Gareth, I have a passion for equity and fairness and social inclusion, and that's what attracts me here to Ecology, and I'm looking forward to the journey. Thank you.
Andy.
Good evening, everybody. My name is Andy Mulligan. I'm a chartered accountant. I've been in financial services for about 20 years. My previous 2 jobs is probably most relevant to Ecology. That I was CFO of 2 small banks, bank rather than building society, but still small growing banks. So I understand the challenges that Ecology faces. I'm excited to join Ecology because when I did my research, it's a genuine business. It's genuine and it's totally credible. And I've worked too many times with places that aren't credible and just doing lip service, and it's a pleasure to work for Ecology. And what I've seen to date, working with the team that's here, they are very professional and absolutely genuine.
Thank you. So we can now move on to the actual voting. And our first resolution is to receive the annual report and accounts. Now, I believe that everybody has filled in their ballot cards either online or downstairs. Is that right?
We have some in the audience.
But we have some in the audience. Right, so now is your chance to vote to receive the annual report and accounts. And then the next one will be around reappointing the auditors, and I'm going to ask Andrew Gold, as chair of the Audit and Compliance Committee, to introduce that resolution. If you got, yeah, just. Oops, sorry, I forgot the slides again. There we go.
So I'm here, as Louise has introduced, as the chair of the Audit and Compliance Committee. So the Audit and Compliance Committee oversee the relationship with the Society's external auditors. So the Audit Committee comprises 3 non-executive directors, so we're independent in our oversight. One of the requirements of building societies is that their members vote on the appointment of the auditors. And as some of you will know, having been involved with the society for some time, we in 2020 appointed BDO, who are a medium-sized firm. We appointed them and moved away from one of the large Big 4 accountancy firms. They've continued to provide the audit, and the relationships continue to develop and evolve. And the Audit Committee's assessment of the relationship is such that we would recommend that they are appointed as their auditors of the Society for the new financial year that we're in now, which will be the year ending 31st of December 2024.
Thank you. So if you could, those of you voting in the room, if you could fill in your ballots now, and then I'm going to introduce the chair of our People, Remuneration and Culture Committee, who quite handily happens to be Mr. Andrew Gold, who is going to present the remuneration report and take questions on that before we approve that.
Okay. So a little bit longer on this one, because I know remuneration is a very important topic. It's something that I know is in a mutual, it's super important to our membership. So just a little bit of background about the People, Remuneration and Culture Committee. Our role is to oversee the Society's remuneration policy and the framework that is associated with that. It's there to oversee how that operates within the organisation as a whole, but it's not there to make individual decisions on individual salaries. So what we're looking for is in line with the Society's values, a fairness and an appropriate approach. And I must stress that no individual is ever in a position where they're asked to form a view on their own salary, so it's very much done in an independent way. I think it's fair to say that, you know, as with any organisation, the remuneration policy should be fair, so that it should reflect what the individual brings to the organisation, both their knowledge, their skills and their performance within the role. And I think it's also those of you that have been to several Ecology Building Society AGMs previously will recognise the importance that we place on fairness. And we're really proud to have and have had for a number of years a pay limit where we actually pay the highest paid person no more than 8 to 1 of what the lowest paid person earns. We're also a living wage accredited employer, so we pay the living wage. And we have continued to look at how we continue to develop the remuneration structure within the Ecology and recognise the evolution of what the Ecology is and its values, but also what it needs to be able to continue to flourish in the future. And one of the things that we've done in the context of that work this year is to look at the pay bandings and also to benchmark those against comparable organisations, both within financial services within the mutual space. Looking ahead, what we've seen in 2023, because of the cost of living crisis, we've seen already pressure on some of those salaries, and consequently we continue to evolve the policy. So in line with the living wage increases that are going to take effect in the summer of 2024, we will see colleagues at the lowest end, at the lower pay grades, receive an increase. But as was referenced in the annual review that went to all members, the board has committed to review the pay limit, the 8-to-1 limit, that in line with when it was last reviewed in 2017, we will engage with the membership about any evolution and any changes that may be made in that area. And I think also we're looking to assess what are the long-term reward structure, such that we get that true alignment between delivering the 2030 strategy and make sure that particularly the executive are really focused on achieving that in line with what you as members co-created, that 2030 strategy. So I've described the policy as it was in 23. I've described how the policy is currently under review and currently evolving, and you will be asked to consider with a view to approving the remuneration report, but I'm happy to take any questions that members may have on that policy and the comments that I've made in respect of it.
Does anyone have any questions for Andrew at this stage? There will be further opportunities to ask questions. No, in that, oh yes you do.
Yes, I have got a question. Thank you for giving me the opportunity.
Oh, sorry. Can you actually wait? And can we give you a microphone so that the online people can hear you? Thank you.
Yeah, thank you for giving me the opportunity to ask a question. I probably wouldn't be here if it weren't for the remuneration report, because when I read it at home and I saw the increase in the ratio of highest to lowest full-time salary in 2023 to 7.16, we reflected the upward pressure on salaries in the marketplace. I think I joined the Ecology Building Society when it was about 1 to 5 or even 1 to 4, I can't remember looking backwards. And yes, I'm very concerned about this upward pressure, because I feel there is no upper limit for the executives, because if you compare yourself with Barclays or other institutions where the ratio is probably 1 to 200 or 250, so this can go up for a long time. So some of your members spoke about social justice and fairness. Then I think, in my opinion, a 1 to 4 ratio is probably acceptable, and if it goes above that, it is, I think, a dangerous path. And I would like you to comment and to justify, because one way to, if you think that the executive deserves so much money, then just increase the lower salaries, and the ratio stays the same according to my mathematics. And then I think you're still in a sort of pay ratio which I find acceptable. But as I said, I think in this country, or probably around the world, you have too many, in my opinion, and I'll be quite drastic, parasitic financial institutions working and parasiting on society and parasiting on their own organization. I was in the past customer of Barclays, and I left them. That was one reason. There were many other reasons. So I would like your comments on this sort of increase and where it is going to end, because, as I said, in the marketplace, there are 1 to 200 or 1 to 300 or even higher ratios. Thank you.
Okay. So I really welcome that question, and I think it's absolutely appropriate that as a member-based organisation, we hear from members their views. And I think one of the things that differentiates the Ecology Building Society, one of the reasons why I'm involved with them, is that limit. So we are the only building society that has that pay limit. And having been a director and indeed the chair of this committee for some time, I'll reference back to the journey that we took when I first became the chair of the committee in 2015, which was we were then at 5 to 1. And as you would identify, we would have exceeded that. So we would not want to exceed the limit that we've agreed in the remuneration policy, which is in effect, members are being asked to vote on. So the first thing is that when that limit last changed, which was as a reference in 2017, that was after engagement with members. So we opened up a conversation at the AGM, like we're doing here, to highlight that there is pressure on the limit. Then we looked at what were alternatives, and we provided benchmarking and other empirical evidence. We reached out at the time to the ethics panel consultation, and then once we got to a level where that limit felt appropriate and enduring, then we were able to change that limit with reference to the membership and with the membership support. What we're proposing and the conversation that in effect we're opening up tonight is a similar approach. So if we, as you will know from the booklet, we're at 7.16, the last thing we would want to do is to exceed that limit and to be reporting that we're exceeding that limit. We are ambitious as a society, and we do recognise that we need certain skills to operate in a regulated industry and to look after your interests as members, and that is putting upward pressure on that ratio. And that's why we want to start that piece of work where we look at that within the auspice of the non-executive directors who sit on the People, Remuneration and Culture Committee. But then there's a reference point back to members with a view to any change to that limit would ultimately be part of the remuneration report that you as members would be asked to vote on next year. Only then, if that was passed, would that result in any changes. The other thing I'd just like to briefly touch on as well is your point, which was so well made about the people at the lower end. So actually, the way that the ratio moves, I guess it moves two ways. It moves if the people at the top get paid more or if the people at the bottom get paid more. And actually in 2022, we took a conscious decision to really improve the pay rates at the bottom end of the scale. I've also referenced that in 2024, the real living wage, we will pass on the benefits of that to colleagues. So I think it's a dynamic, but the one thing that we're absolutely clear about is, as the only building society with a limit that's agreed by members, the last thing that we would want to do is to breach it. But equally, we have to endure and sustain the organisation. So as we get closer to that limit, just as we did in 2016 and agreed a change with members in 2017, some 7 years later on, we're opening up a conversation again, because the world, as we know, is so different 7 years on. The final point I would make on it, when we moved that limit with reference to members from 5 to 1, which you rightly identified, to 8 to 1, what this didn't do as a ratio was immediately jump to 8 to 1. It's a limit. So it's a guide that this remuneration will be no more than the limit, and we will continue to exercise and review individuals' performance, skills, experience, and what are rates, because we have a responsibility to be fair to colleagues and to pay them for the role that they fulfil to enable the society to continue to flourish. So I apologise if that's a long answer, but I think it reflects the commitment as a mutual to have a pay limit, to not immediately jump to it, but to continue to engage with members about what that limit should be to make sure that the society can continue to flourish well into the future. So thank you for the question.
Thank you. So if those of you voting in person here could now vote for Resolution 3 to approve the Director's Remuneration Report for the year ended 31st of December 2023. We now move on to re-electing the directors. As I've already explained, we now have annual elections, so the whole board is up for re-election. So there's one resolution for each director. The first one is Gio D'Alessio. So if anyone has any further questions for Gio, now would be the ideal time. Yes? Oh, sorry, can you wait for the microphone, which is speeding on its way? Thank you.
Yes, with this trend towards more technology, information technology, is the banking regulator looking at requiring banking information technology to be handled by people who are a member of the British Computer Society, which sets, I think it may be the body that sets an ethical code.
So the question was, is the banking regulator looking at insisting that banking technology is run by people or with the qualification from the British Computer Society, which has a ethical code?
First of all, I think it is... Oh,
sorry?
Need a microphone.
hello? Is it working? First of all, thank you for the question. I think the transformation requires a lot of skills, both in terms of process transformation and then also in system transformation. First, there is a lot of the changes that are going to be required. They are actually already dictated by the regulator. We've also get input from system integrators that are actually expert in the financial systems that needs to be deployed. We have not checked, I'm not checked personally whether the people that gave us the advice was directly from the British Computer Society, but actually are part of the financial system industry for the past 15, 20 years, okay? And certainly, you know, the concept of ethics and member, if you like, member interest first is something that drives our everyday discussions at the board and into the implementation. So is the concept of bringing, you know, ethics into technology is something that drives us every day. Certainly myself is one of the reasons why I joined the society, to make sure that you know, technology becomes, if you like, a conduit to implement the ethos of the society. So things like accessibility, things like fairness, reduction in bias, and in general, the ability to tailor, you know, the user experience of our members in line with what they expect. Okay.
Thank you. Any more questions for Gio? I think at this stage, if we could try and stick to questions that really concern people's suitability for the board, and there will be an opportunity to ask general questions about how the board approaches things later on. So if we can vote on the resolution to re-elect Giovanni D'Alessio, and the next person, resolution 4.2, is for Andrew Gold. Does anyone have any specific questions for Andrew? No. In that case, would you please mark your papers if you're voting in person for Andrew. Jaden Green is the next one. Anyone have any specific questions for him? No. Thank you. So if we could vote for Jaden. Gareth Griffiths. Anyone have any questions for Gareth? Nope. Thank you. Oh, right, somebody else. Anyone have any questions for me at this stage? Very happy to answer. No, thank you. So that's all the re-elections that you've now been able to vote on. So we now move on to the new elections. Chris White, who's our Chief Financial Officer. Anybody got any questions for him? No, thank you. Kelly Hargraves, I looked in the wrong direction, but there she is over there. Thank you. Samira Khalik. Thank you. And finally, Andy Mulligan over at the end there. Thank you very much. So I think that concludes the voting. So I can now ask tellers from UK Engage, an independent organisation who deals with our voting for us, so that you can be sure that it's completely independently run and uninfluenced. So if you could go away and do your telling stuff. If you've got any voting papers, if you could pass them along, thank you. Any ballot papers over on this side? Doesn't look like it. Thank you very much. So while they go away and do their counting, we now have some time where we can basically answer questions. Any questions that you have for the directors, please just stick up your hands and we'll see what we can do. Anybody got any questions? Yes, at the back there. Yes, wait for microphone. Looks like we've only got one working microphone, so Chris is going to be busy.
Yes, I'm wondering what the Ecology Building Society is doing to monitor dormant accounts, because a concerning leaflet came out with my council tax bill recently about the number of people going missing in the county where I live, and it's approaching half a percent of the population, which does seem rather large.
Yes, thank you. Is that you, Chris? Dormant accounts? What are we doing about dormant accounts? If you could actually, if you could just come up to, or Chris will bring. Why don't you just come up? It's probably easier.
Yep, no, that's fine. Yeah, no, I think it's a very reasonable question. I think that the society does everything it can to ensure that it remains in contact with all of its members. So the AGM process that we're obviously in the process of is a large component of that. In fact, our transformation project is something that will help us in this space as well, as we're able to improve our systems to be able to ensure that the records that we keep through long periods of time effectively to ensure that we're able to track and continually trace all of our members is important. And then the last thing I'd maybe add is that the society's working currently on a project to assess whether or not we can engage with companies that specialise effectively in being able to trace and track effectively accounts that we think may have dormancy attached to them, and that we would be able to contact members to reassociate them with their with the accounts that they've obviously lost touch with. Does that answer your question?
Thank you. Any other questions? We have had some questions sent in advance. So I'm going to pick some of those. And I think this is probably one for you again, Chris. If I mention the word management expenses ratio to you.
Yep, no.
The Society's management expenses ratio at 2.2% is now almost 1.5 times the average for 2006 to 20. The management expenses are considerably higher than all 6 of a collection of similar competitor societies, and that's been true for each of the last 3 years. The high level of management expenses will mean that the Society can't offer as good value rates as it used to savers and borrowers while maintaining profitability, and it won't be able to offer as good value as these competitors. What's the outlook for the Society's management expenses, and therefore its ability to maximise the value offered to savers and borrowers?
Okay. Thanks, Louise. I think my first challenge is remembering all of the component parts of the question. But so yes, I think firstly it is worth acknowledging that the management expense ratio of the Society is higher than peers. I would say that the comparison to the 2006 to current ratio is probably a slightly disingenuous comparison, and the reason for that being that all building societies are seeing increases in their cost-income ratios and cost bases as regulation increases the amount of skills that societies need to have within its staff base to be able to manage regulation. I think also the complexity of some of the technology changes that we are undertaking as a sector, as well as individually as a building society, are adding to those cost pressures. Nonetheless, I would kind of come back to that point around the fact that Ecology building societies' cost ratio is nonetheless higher than our peers currently, so that the point remains valid and fair. So I think that some of that is to do with where we are on our journey in the transformation programme, and I think one of the things that's very positive about Ecology Building Society is that it has got very much onto the front foot around the changes in technology that the whole sector are facing, and that means that we are, as well as being ahead in being able to tackle that project, to be able to get the society to a really robust and viable position from a technology standpoint, that obviously that project is ahead, which means that some of the costs associated with it are ahead by comparison to peers as well. I think two more sub-points within the question, the first of which is around whether or not as an organisation we're able to offer as good values to savers with a high cost base. I think some of the presentation that I gave earlier demonstrated hopefully quite clearly that the society is dedicated to that balance between ensuring that it is able to provide good value to our savings members. And I guess as a finance professional that's worked in building societies for a couple of decades now, I think it's been very pleasing through the increase in bank base rates we've seen over the last few years to be able to increase the value the building societies have been able to provide to our savings members. I think that's been a really positive story of the I guess challenging kind of macroeconomic environment that we've seen over the last few years. So I think the demonstration that we've seen with how the Ecology Building Society has managed its margin and the way that it has been able to manage that margin effectively to both return value to savers and be able to put itself into a position to be able to manage some of the cost of transformation means that we're able to balance that both of those important priorities for the society well. And then I think the last point in the question was around trajectory and where we are heading. So I touched in my presentation around the fact that we do expect costs to remain high because we have not completed the transformation and technology changes we're trying to make as a society yet, and we do expect those costs to remain through the rest of 2024 and into 2025, which will mean that our costs do remain high and our cost-income ratios therefore kind of also unfavourable in comparison to peers through that period. However, our financial planning shows that as you move into the medium term past that period of significant investment, you start to see, start to reap the rewards of that investment. You start to see the efficiencies from the society being able to kind of interact with its members in a more effective way, being able to serve its members in a more effective way, and therefore you start to see the trajectory of those cost-income ratios and our cost base by comparison to the size of the organisation and its ability to generate revenue start to improve and increase, and we would expect through that period for our comparison against peers to also improve.
Thank you, Chris. So, a number of other questions have come up. There's another quite technical one, which I'm actually going to ask Gareth, because I feel that Chris has been doing a lot of talking, and I'm just trying to find it. There are changes coming up to the banking regulations known as Basel 3.1. And I won't go into why they're called Basel 3.1, just take it as a meaningless name. Unfortunately, it's not as meaningless as it should be. And they are likely to, or they could have, implications for ecology in several areas, but in particular because most of our mortgages are for self-build properties. So I'm going to ask Gareth, I'm sorry, Gareth, to put you on the spot, roughly what's going on and why are we worried?
Thank you. I'm pretty sure that at 7 o'clock on a Thursday evening, everyone wants to hear about Basel 3.1. I'm sure about it. All right, so without giving the kind of whole potted history of the Basel Standards Committee on Banking, they are fundamental in the international monetary framework for setting capital rules and regulations. Capital being the kind of the loss absorbing cash that we keep on hand in case any of our loans go bad or into default, and that we have to cover those as part of running the society. So there is and I will try and steer away from the technical. We'd agreed Chris was going to do all the hard questions, but anyway, effectively we have to risk weight the loans that we make to our mortgage borrowing members. And what the Basel 3.1 reforms are trying to do, amongst other things, is that they are trying to put a package of measures to try and harmonise risk weightings. That then determines how much capital you have to hold. And clearly for a building society that is only 43 years old, hasn't had hundreds of years worth of retained earnings and profits going onto the balance sheet as capital. For a building society that's 43 years old, we are particularly sensitive to this, and the regulator is taking a view that self-build loans are very risky, right? And so therefore are increasing the risk weighting, and then therefore that means the capital that we have to hold. If I can clarify any of that, just let me know, because it is a slightly sort of more nuanced technical banking thing. So we have worked very proactively with a number of other building societies and our trade association, the Building Society Association, to provide the regulator, the Prudential Regulation Authority, with significant amounts of data, which actually backs the assertion that self-build loans are in fact not as risky as they potentially perceive them to be. In fact, the loss incidences, how much loss lenders see, is incredibly low. And I think it's one of the things that I am most proud of as Chief Executive of Ecology, is that in our 43 years of operation, we've lost somewhere in the region of £40,000, and we've never made a mortgage borrowing member homeless through repossession. And that is, I think, something to be very proud of in terms of our lending record. That is not the same for the mainstream mortgage market, which has a more preferential and lower risk weighting, and so therefore those organisations need to hold less capital. We are currently awaiting the final Basel 3.1 rules. They are due by the end of the first half of this year. Chris, Joe, our Head of Risk and Compliance, and I had a call with our regulators the other day, and they promised us faithfully that they will be delivering the end state rules as of the end of the first half of this year. I take that to mean probably most likely that will be June. We are very much hopeful that the regulator, with the amount and volume of data that we have provided them for loss incidences, will reconsider their position, and that they will revise the riskiness of self-build loans down, which means that we can continue to support more projects, because fundamentally that is the potential downside, is that if we have to hold more capital, that may well stop us being able to lend to as many members to help support and finance their projects, which, as you can probably all imagine, would be a pretty sad state of affairs. So I hope that has been a whistle-stop tour of the exciting Basel 3.1 rules and regulations, but is something that you can probably imagine is occupying our thoughts and our minds at the moment.
So, thank you, Gareth, and sorry to everyone really for subjecting you to that. But the reason I wanted to do it is because we are a building society, so we have to run ourselves in accordance with the regulations, which are, I may say, much more burdensome for building societies than they are for banks, for various historical reasons. And this very much constrains what we can do. So we often get questions about why can't we do different kinds of lending? Is it just mortgages we do, and so on? And mainly that's because we're a building society. Banks can be much freer about what they do, how they finance things. So obviously what we try to do is we try to finance activities, especially in the housing market and other forms of property on the commercial property side. We try and finance projects that are going to be good for the environment. So several questions that we do get asked from time to time are things like, sorry, I'm just lost it now, my page again. Are we planning, for example, to stop lending on houses that have fossil fuel heating systems, oil or gas-fired burners, boilers? I mean, obviously, gas is better than oil, but neither of them are great. And that's something we're looking into. But it's quite complicated because the other thing we try and do, and we want to do, is we don't want to end up just supporting wealthy people who can afford expensive heat pumps, or people who live in brilliantly insulated houses. One of the big problems in this country is the overall standard of the housing stock. On the whole, it's poorly insulated, has inefficient heating, but people have to live somewhere. And there's a big worry that greenwashing is going to mean that it's more and more difficult for those who have less money to improve the housing stock, to live in houses or dwellings that are actually fit to live in. So, for example, we see banks saying, the average EPC rating of our mortgage portfolio is C. Isn't that good? It shows we're supporting low carbon. What it means is that they're not supporting people who really need the money in order to find somewhere to live. So as we consider these issues, and personally, I'm very, very keen that we find some way of encouraging a general switch away from fossil fuels in home heating, but we must take into account the impact that this could have on people who quite honestly just simply cannot afford what in their terms would be the luxury of a heat pump. The reason I'm talking about this is because I'm expecting the tellers just to reappear with the results. Yes? Right, so we are still waiting. The other question that I've had in is about what are we doing in terms of net zero? What action have we been taking to promote net zero ahead of the general election and a potential change in government? We're trying, we're really trying. Our voice is quite small, but I hope it's insistent. We have co-signed letters to the Prime Minister on this matter. I mean, to be honest, how much good is that going to do? On the other hand, if the letters weren't written, they certainly wouldn't do any good. But we're supporting campaign activity in our sector in particular. So we're quite vocal within the Building Societies Association, trying to get other building societies to put their voices where it matters. We're particularly trying to help trigger change in the way that the energy assessments for housing work. The current EPC assessments have a lot of disadvantages. For example, typically a house with a heat pump will have a lower grade than a house with a gas boiler, because as it stands at the moment with current prices, heat pumps may be more expensive to run, but of course in the long term we expect them to be cheaper as electricity prices come down, and they're certainly a lot better for the environment. So there's a lot of problems with the existing system, and we're trying to get that addressed. We're also very much looking at how we can take account of embodied carbon. So one of the problems with housing is not just the current emissions from heating, but especially as far as construction goes, is the construction emissions and the emissions that go into all the components of any renovation or building. And we're advocating for that to be included in the EPC rating as well. So there's not much we can do on our own, but in conjunction with partners and with groups that we are members of, we're putting as much effort as we can, consistent with actually not losing sight of the fact that what we're trying to do here is run a building society. So I hope that's given you some flavour of the sort of activities we're doing on that front. And we can now come. Do I get a sealed envelope or anything? No. So if you'd like to come and give us the results, that would be great.
Thank you. I'm pleased to announce the results for the resolution voting is as follows. Resolution 1, to receive the annual report and accounts for the year ended 31st December 2023, 1,501 votes for, 15 votes against, 21 abstentions. Resolution 2, to reappoint BDO LLP as auditors, 1,434 votes for, 49 votes against, 54 abstentions. Resolution 3, to approve the Director's remuneration report for the year ended 31st December 2023, 1,360 votes for, 103 votes against, 74 abstentions. Resolution 4.1, to re-elect Giovanni D'Alessio, 1,408 votes for, 76 votes against, 53 abstentions. Resolution 4.2, to re-elect Andrew John Gold, 1,418 votes for, 58 votes against, 61 abstentions. Resolution 4.3, to re-elect Carl Jaden Green, 1,436 votes for, 49 votes against, 52 abstentions. Resolution 4.4, to re-elect Gareth Charles Griffiths, 1,441 votes for, 50 votes against, 46 abstentions. Resolution 4.5, to re-elect Louise Margaret Pryor, 1,454 votes for, 52 votes against, 31 abstentions. Resolution 4.6, to elect Christopher Ben White, 1,431 votes for, 50 votes against, 56 abstentions. Resolution 4.7, to elect Kelly-Ann Hargraves, 1,454 votes for, 46 votes against, 37 abstentions. Resolution 4.8, to elect Samira Kauza Khalik, 1,450 votes for, 45 votes against, 42 abstentions. And Resolution 4.9, to elect Andrew Kyle Mulligan, 1,393 votes for, 68 votes against, 76 abstentions. Thank you.
Thank you very much. So we now move on to talk about our purpose. Gareth is going to tell you about the project we've had to think about our purpose, why we've been thinking about it, and what the results are.
Thank you very much. Thank you to also whoever turned the heating up. Thank you. So, I talked about, when we talked about Basel 3.1, talked about the age of the building society, and I was talking to Chris over there, who was talking about the terrace house in Cross Hills when he first started saving with Ecology. We got a picture there, and the Silsden HQ under construction. That's a good 20 years old now, but sort of going back through the annals of time, and fundamentally, a purpose should be the kind of core reason for being, the absolute North Star, the thing that intuitively you get up every morning and you think, yeah, that's what I'm going into work to do. And I will be very candid with you as our members. We have a very strong vision of what we want to see in the world. We have a very strong mission, i.e. who we're doing it for, and we talk about being a member-led organisation dedicated to sustainable building practices and helping communities. But actually, what we never really truly articulated was the why. And that, for me, is a really important bit for us to be able to talk to you, our members, about, but also a really important part for colleagues to be able to really connect with on a day-to-day basis. So, as Louise said, we commissioned a project to look at our purpose, and I'm really proud to be able to share it with you. But we have talked to our members. I was absolutely delighted. We sent a survey out to members. We sent a survey to 6,500 members. Over 1,600 members returned the survey, which, believe me, I know how busy life is. That for me is a really humbling result. So a big thank you to you if you were in this room and you managed to send one of the surveys back. We talked to some of our founders. That is a little more difficult if you're at Skipton Building Society, being 150 years old, and that is probably one of the privileges that I have had over the last couple of months, is really reconnecting with our founders, the people that were in that kind of stone brick terraced building, to talk about the essence of why Ecology was founded in the very first place. And I do think we've got Gus online. So hello, Gus, if you are online. I don't actually know who I'm waving to, which camera it is. There we go. Hello, good evening. And we were meant to be having Jim join us, so I do really hope Jim's okay. But Jim and Gus were two of our founder members. And what was beautiful for me was sat in our head office with Jim, and he brought all of his correspondence in from 1981, 1982, and it was on this kind of, beautifully kept, almost parchment-like paper, but really started to talk about the essence of why it was Ecology was founded in the first place. And I'll always remember two very, very similar things that both Jim and Gus talked to me about. Always remember, it's somebody else's money. And I look around the room and I fundamentally remember it's your money. And that makes me feel very responsible for making sure that we look after it, but that we also do good with it. And always remember, Gareth, that Ecology was founded to do the things that other people wouldn't do. And I think that is a really, really important point. We ran a number of workshops with our colleagues, because this was about as much about engaging members as it was about engaging our colleagues. An important point of how we connect with our colleagues on a consistent basis. And some of the things that came out of some of these workshops, if we don't do it, no one else will. That very strong sense of responsibility. You shouldn't need to be a billionaire to afford sustainability, and so therefore how can we try and help people in the world to be living a more sustainable life? And it's fundamentally our job to lead by example. As I talked to the team back at head office about being a triple bottom line organisation, focusing on people, planet and profit, it's not easy, but good. Because if it was easy, everybody would be doing it. It's meant to be a challenge, but at the same time, we're meant to show and be an exemplar that there is a better way to run a balanced business. So, without further ado, I'd really love to be able to share a video that we've created to highlight our refreshed and renewed purpose, something that can take us from being a startup for the last 43 years to being an upstart for the next 43 years. And I will then do a very brief kind of rundown of our purpose. And at the end, I would invite you all to give us your thoughts. We've got some cards at the end. So there we go. Louise is deftly modelling one there. Please stay around for a cookie, a coffee, and to fill out your cards. It would be lovely to hear from you. So here we go. Hope everything's teed up for the sound. just leave that to dwell for 10 or so seconds, and then maybe give you a bit more of a rundown of how did we end up here, what went into making this. So I don't think the world adds up. I talked to you about my reason for being here. I do see a lot of greenwash in the world, and I think that often there's a temptation for people to talk a good game, but it's fundamentally more than that. But more than that, I see the inequality, the inequity, the unfairness that exists in our society. I took a couple of days off last week, and never more was that confirmed when I was reading the book How Much Does Britain Cost?, which is a fascinating read for anybody who's interested in social justice. But the absolute inequity that exists within our society, this phrase fundamentally talks to that, but is also a direct acknowledgement of our vision to see a fair society in a sustainable world, because that's the world that we want to create. If I go back to what Jim and Gus told me, daring to be different is our calling, because that's absolutely what David Pedley and the brave band of people who set Ecology up 43 years ago had envisioned, is that there was a different way to try and make finance to change the world. And we're not just choosing. This isn't just a sort of a change of tact or a move of strategy. Ecology has always and will always be compelled in order to act. Part of what Louise was talking about was our agitation for change, trying to change the system that we operate in, because we believe there to be a better way. But we absolutely need to be brave, and we absolutely need to be daring in challenging that. The one thing I do just want to caveat this with, we can't forget, as my Basel 3.1 diatribe would no doubt have proved, that we are a building society, and we need it to be a bloody good one, because we have the right and responsibility to look after your money for and on your behalf, and we need to make sure that we are absolutely systemically safe, and that we comply with all the obligations that are incumbent upon us. So we have to be a great building society first and foremost. This is probably then the next bit, my favourite part of this, because I think three little words do oh so much. But the first sort of part, and I guess it's a proper play on words, suggests that we are a lender. That's what we do. That's what we get up to, to do on a day-to-day basis. We lend, but we lend to have an impact, and we lend to make a difference, and that is woven throughout our history and our DNA. But more importantly, we can lend our power, and Louise talked about a number of the open letters that we've signed to ministers, on the Green Homes Accelerator, the Green Finance schemes, etc. We can lend our power alongside and collectively with others to amplify the message of wider societal change. So this is about us lending the power that we hold into different causes. And then last but not least, I talked about it, and this is one of my personal reasons. I've been 20 years in financial services. I've got a degree in banking, and that's not really what excites me. I'm not going to lie. I'm trying to change the social justice landscape, and if it is to be a just transition, then everybody has to be a part of the just transition. And so in doing that, everybody's story does actually deserve to thrive. And look, we can't guarantee success for everybody, right? Let's be honest, we have a number of limitations. I talked about our capital limitation, etc., etc. We're not going to be able to lend to everybody and bring their stories to life in that way, but actually pretty much everybody can save with us. Money launderers need not apply, but nonetheless, everybody has got the opportunity of saving with us. This also talks to the culture that we want to create for colleagues, co-workers at Ecology, because their stories deserve to thrive, and Ecology is one of those places that actually can help make that a reality as well. So this was both a real nod to the just transition, helping everybody's stories to thrive, as well as the colleagues in Ecology. So, what next? Well, we're going to take this on the road. and we're going to be very much talking to our members about how we are a purpose-led and values-driven business, and we're going to be giving a full strategy update as well as unveiling all of our net zero plans. And it would be lovely to see the people around the room and meet people that are online in a face-to-face environment when we come out later in the spring and early into summer for our member meetups. So I will happily take any questions that anyone has around our purpose, but my only ask would be, if we finish off, I'll leave it up on the screen for you to just think about and reflect on. Please, it'd be lovely to hear your thoughts, because this has been fundamentally co-authored and co-created utilising the power of our members, and so yeah, would love to get your thoughts. And with that, I do indeed believe that it brings us on to any other business, and I'll pass you back to Louise.
Thank you. So we haven't got time to take any specific questions now, but I know Gareth will be hanging around afterwards, so you can catch him then. So no other business that I'm aware of. I just want to thank everybody here, the members who are here in person, the members who are here online, because this is what we are. We are a mutual, we are a building society. Our members are we're nothing without members. We can't exist. So thanks to you all. And I hope we've been able, within the confines of what is a fairly constrained meeting, the AGM, by law, we have to cover certain bits of business and everything, but I hope we've managed to give you some sort of flavour of what we're doing both this year, but in general, to try and look after our members' money and to make the world a better place. I would like especially to thank Kerry Mashford and Vince Smith, our two retiring directors, for their service and commitment to the society and the members and to our mission and indeed purpose over the last few years. So thank you very much to them. I would like to thank especially the colleagues who've put together this event. So I'd like to thank Julie, Chris, Denise, Marcus, Rachel, Harry, Laura, Joe, Laura and Annette, without whom we would not be here today. So thank you to them. And most of them have been helping you, receiving you at the entrance, bringing you up, chatting to you. So you'll have spoken to them. I said thanks to our members for joining the AGM in person. Thanks especially to those of you who have switched to paperless communication. That really means a lot to us. It not only helps us be more efficient about doing the communications, but also, of course, there are fewer emissions that way, which is good. And we'll update later about the donation we give to Trees for Cities to recognise that. We'll be sending a follow-up email to everyone here and everyone online for general feedback, but also asking for comments on our purpose. And those of you who are present will be given one of these fantastic little comments cards that you can fill in. Chris over there has got a great pile of them. We'd love it if you could do that. And everyone who is here in person, I'm afraid we can't do this for the online people, but everyone who's here in person, we've got refreshments at the back of the room, so please do join us to catch up, ask any questions that you weren't able to ask in the meeting. So thank you to everybody, and I now declare the meeting closed.